So I don't know if there were any initial questions about the presentation from Leon and Jamia on reporting. If not, we'll just jump. Oh, I'm sorry, there is one. Heather from Missouri. Missouri?
I just had a question. I know we do the carryover reallotment report and we're estimating what we're going to spend, and we do that in August. We do the same thing with our household report, knowing we're still finishing up our program. And it's my understanding we're supposed to make changes to our carryover reallotment when we become aware of them or reconcile them, at least when we're doing our SF 425, correct?
Yeah.
So my question, I guess, is if you guys have all that information, it's all being lined up in OLDC, some of the frustration that my fiscal people are like, well, we've reported that, and then we have to go back and change it and report it over and over and over again. So it's kind of, it's that whole reconciliation process. I mean, we understand from the program side that we're estimating in August and that we give a final report in December. But when they're making the estimation, they think that that's the purpose of the report in August, and that the 425 is the actual final report, and the grantee survey is that final fiscal report. And so why do they have to go back and then have to redo all the carryover reallotment reports to reconcile everything when the final reports have what our final fiscal information is?
Sure. Great question, Heather. Thanks. And you raise a general point that is really worth emphasizing, that for all of our reports, there is kind of an implied understanding that if your data changes, if an error is discovered at some point down the road, we are expecting that you will submit a revised form. And so when you go into OLDC, the first time you submit a form to us, once our analyst clicks in review, that's going to lock that form so that you can no longer edit it or change the certification or anything like that. And then once they consider it complete, they will click accept, and that will finalize the form essentially. Or they'll click reject and send it back to you for further work, and where you'll unclick the certify and redo the work that needs to be changed. Eventually, once that form is accepted in OLDC, you can always go back in and click the option for new, edit, revise a form. And what it will do is it will create a separate version of that form called revision number 1. And then if you have another revision further down the road, there'll be revision number 2. There's no limit on the number of revisions. And so I think a good number of our grantees in working with our contractor or prize over the last year on some of the data to some forms have had that experience of having to go back in and revise once we figure out there was some calculation issues that needed to be worked out. So just know that even after your form is accepted, you can always go back in and submit a revision to us. And we really encourage that you use that remarks function on the report status page in OLDC. So that it's at the bottom of that screen. You just want to uncheck the box that says private remarks so that we actually can see it. And you can just put a remark saying, I submitted a revised form because this data has been updated or this correction has been made, and flag which section of that. And that's really, really helpful with your plan in particular, because as you all know, the plan is pretty long and detailed. And so to flag for us which sections you may have revised is very helpful. So going back to Heather's point about why do we expect that the forms will be updated. So yes, OLDC is checking against all these forms. We're trying to build all these validations, cross-validations from the forms. But ultimately, we want to make sure that whoever goes back and looks at the program, whether it's our monitors or an independent auditor from the A133, that they can retrace, they can look at any form independently and see that they have the latest, the most accurate data possible. This is an important point to make on the standard form 425, the federal financial report, because that form, as you heard, is required for each different accounting line item in our payment management system. So if you get your regular block grant funding from us, that's one 425. If you get a REACH grant, that's a separate 425 form. If you get a leveraging grant, that's a separate 425 form. if you get a reallotment, that's true. A reallotment will come through as a different account number, so that's a separate 425 form. Emergency contingency money, if we ever get appropriations for that, that's a separate 425 form. And so, that form being due 90 days after the close of a federal fiscal year, it may be that you haven't liquidated all of your obligations, right? You're reporting your obligations on that form. You may still have some that have not been expended yet. Your obligations were made timely, but you haven't expended them all out yet. And so even that form may need to be updated further down the road once you've liquidated or expended all of your obligations. Likewise, if you've done carryover, well, you're probably not going to liquidate all those carryover obligations until the following year. So that following year, in addition to submitting a 425 for that year's funding, you're going to have to go back and submit a revised 425 for the a second form instead of a revision.
So the way the 425 is set up in OLDC is you select the reporting year. So when you are reporting for your fiscal year 14 funds, the first report you submit is about what you did with the funds in fiscal year 14. And then if you have carryover of 14 funds into 15, when fiscal year 15 is over, you go back to the 2014 funds section and submit a second report for the reporting period of fiscal year 15, but for 14 funds. It's very confusing to explain, but it makes sense if you look in OLDC under that form. So it's 2 different forms for every year, for every year's worth of funds.
Okay.
Sorry. I wish it was, I've asked the people who engineer OLDC to make that more user-friendly because I recognize that it is not at all.
And going back to Heather's original example of the carryover and reallotment report, our primary purpose in reviewing that report in the fourth quarter for us is really twofold. One, if anyone is estimating any reallotment, we want to reach out right away before the close of that federal fiscal year to figure out, okay, why are you projecting money that you're going to have to return back to us, and try to brainstorm ways that you might still be able to obligate those funds and not have to return them to us, because as Julia said earlier, we really don't want the money back. We want you to use it. And then, of course, if for some reason that can't be done, we are then relying on that report for when we redistribute reallotment in the following year. So we're basing that redistribution off the carryover report, not off the 425. And so it's been kind of a long process here this year trying to get a Federal Register notice published that will provide 30 days of public comment about the reallotment balances that grantees reported for 2014. We are very hopeful that that notice will get published within the next week or two. And so once that comment period closes, then we'll be able to reconcile if anybody notified us that there is a correction to be made, and then finalize those award letters and distribute them to all of you, our current grantees. So, we anticipate it'll be a very small award. Total, there might be, I just heard there might be a correction to the amount, so it might be somewhere between 4 to 6 million total distributed across all of our 200 plus grantees. So again, we're talking a very small amount per grantee, but we only have the next federal fiscal year within which to redistribute reallotment funds from the prior year. So it's really important that we get an accurate reallotment figure as soon as possible in the next federal fiscal year so that we can get that redistribution out. And of course, the topic that you all love this morning with Julia on obligations can really impact the amount that gets redistributed the next year, right? Because if you do wind up having money de-obligated from one of your sub-grantees that they weren't able to use, that will potentially become reallotment if you don't have that wiggle room left in your carryover. I think we've pounded that issue. Were there any other questions about Leon or Jamia's presentation on reporting? If not, some people have submitted questions. Oh, yes?
I got a question about the model plan. So we post ours on...
I'm sorry, can you wait for the mic? We want to be sure that we can hear
Okay,
your
so
question.
my question's about the model plan. We post our plan, even the draft of it, on our website. We use it so people can look at it for the state hearing. We also, so we want to have it available. We'd like to have a nice, readable, some kind of user-friendly form that people could look at. Is there a way that that we could generate a report from what we've put into the OLDC so that it looks presentable for somebody else that wants to look at it?
Yes, there should be a button at the top of the table of contents section that says, I want to say it says print full report. And when you click that button, it produces a PDF document of all of the questions and your responses. I'm sorry, John, we're trying to record the questions.
Actually, I work with Doug, and we have the same challenges. It's not accessible, so when we try to put it on, it's not, you can't comply with the rules of accessibility.
It's not 508 compliant.
That's right. And so we have to rewrite it in order to get it on there, and it makes us not want to make it public, which is not a good thing.
Okay, I hear that concern. I will see what I can do. I won't be able to do anything for this year, but that is now on the list. I did not think about that.
So the OLDC system is one that our agency has been using for a while, and our program decided we're going to put all of our forms in there a couple of years ago. So that's why, we have to go to the programmers and beg and plead that they make these changes because it impacts other programs as well. But thank you for raising that because I wasn't even aware of that until you mentioned it. And we have a requirement even in all of our contracts that our documents be 508 accessible online. So that's an important comment.
And with that on the list, the other thing that's cumbersome is the attachments that you put in. So if that can be on the list too. I mean, we found a way, it's not compliant, but we just take the PDF file from the model plan application and create a merged PDF with the attachments next, following the pertinent
Oh,
sections.
meaning you would want a button that says put all the attachments together into one. Okay. Okay, that's on the list too. That I think would be easier, or just in terms of, yeah. But I think the 508 thing is very important, and I've been meeting with those engineers because they're working on kind of really big, like a big overhaul. I'm not sure if you've noticed, but OLDC is rather clunky. What? Yeah. So they recognize that, our engineers, and so they're now working on a massive overhaul. And I keep records of all the calls and emails I get from all you guys when you say, I can't figure this out, this is annoying. Because, I mean, it's annoying to us, too. And so I spent a couple hours with them saying, these are all the things I want you to fix. The 508 thing was not on the list, but it will get on the list because that's important. But the attachment thing was on the list. That's something that's been brought up before. So I've added that to my please make OLDC work better request.
Other questions on reports and forms? Okay. And just a reminder, we still have Leon, Kate, Jamia, Joji, Peter in the audience as well. Am I missing any other staff from our office? Imani. So Imani, there you are. If you want to stand up and just wave so people can put a face with the name. Imani Moye is part of our division. She's been with us for a number of years. She works on special projects with our office, so another resource to you as well. So some people have submitted questions through the box out front, and I don't know if any more have been submitted, but we have a few to get started with. I'm going to pose the question and then see who wants to take on the response. First question, can you explain the differences between action transmittals, information memoranda, and Dear Colleague correspondence, and which venues are used for each type of information?
Sure. I feel like that one's, I can handle that one. All right. So, let's go in alphabetical order. I have OCD, I like order. An action transmittal is a document we release when we want our grantees to do something, perform an action. So these are released when we need you to fill out a form. So for all of our forms and reports, we issue an action transmittal that says, hey, here's the report, it's due on this date, here are the instructions, things you need to know. So those are action transmittals. A Dear Colleague letter is sort of semi-formal correspondence. So your invitations to attend these conferences are Dear Colleague letters. When we hired new staff and we changed up our liaison assignments, we sent a Dear Colleague letter. They're more formal than email, less formal than, a letter on letterhead with a hard copy signature, right? So it's when we want to communicate with you, that when something applies, information applies to all of you or most of you, but we don't necessarily need you to do anything per se. It's not an action requirement. It's just information for you to know. It's kind of like a semi-formal heads up. An information memorandum is a communication of a policy position. Okay, so what's a good example? In very, very few amount of days, we will be issuing an information, can I say this? We will be issuing an information memorandum on the OMB Uniform Administrative Guidance. That's a policy position of our office, of the applicability of this guidance. You will receive it as an information memorandum.
Mixed status household.
We issued yes, thank you, Akam. We issued an information memorandum on mixed status households and applicability of LIHEAP requirements, meaning what to do in a household where some people are legal residents, some people are not legal residents. That was a policy statement. That was an official policy position. So that's an information memorandum. I see one of our staff would like to have some input. Peter?
Yeah, some of sorry. Some of the items of correspondence that we used to issue in the form of an information memorandum, like, for example, the updates to the liaisons, regional assignments, we now issue more in the form of a Dear Colleague letter.
Right, because per my little breakout, the information memorandum vehicle is really reserved for our communication of a policy position, and the assignment of a liaison is not a policy. There's no policy being interpreted there. That's just their name and their email address. Good? Yeah, all right. He gets.
Okay. Akam, you have a two-part question. One, are subgrantees required to operate an Assurance 16 component, or is that only referred for the grantee to have it available? So is it optional or required of subgrantees?
It's an optional thing. So if it's a state level decision, so 5% of your total allocation is available for Assurance 16 activities, and if you choose to use that, and if you're run by a subgrantee, the LIHEAP is run by subgrantee, then that 5% can be distributed to subgrantees, or if necessary, you can retain it at the state level, at the grantee level, to support activities as you choose. And once again, Assurance 16 is to support activities for energy burden reduction, case management, energy self-sufficiency, energy education. Those type of activities are for Assurance 16.
Right. Follow-up question?
So if we were to distribute the Assurance 16 funds to our agencies to let them use it, can they use it for, like when you said case management, that sort of thing, can they use it for salaries and
Salaries for
materials and advertising and that sort of thing? Or is it not for that sort of thing?
No, they can use it for salaries as long as those positions are doing Assurance 16 eligible activities. Yes.
Yeah. So any cost related to that activity as the state or tribe has defined Assurance 16. You know, the statute just gives some examples. It's not an exhaustive list. And again, this kind of ties into your definition for admin costs as well, where you have flexibility there in terms of how you're counting staff time. Are you splitting their time between admin and direct? Outreach is typically considered neither Assurance 16 nor admin. It's usually a direct program cost. So, you know, if you look back at that IM from 2000 on administrative costs, and it talks about, it gives some examples from the TANF program about how you can look at IT costs, how you can look at caseworker costs and the type of duties that they're doing. Case management tends to be more of a direct cost. Assurance 16 is really more about financial capability training, energy efficiency education, work negotiating with utilities and vendors. So that's kind of, it's that vague area where, again, we're going to look to your interpretation and only weigh in if it strikes us as being really unreasonable or clearly erroneous. I see a couple hands going up right back here, and then we'll go to the right.
Okay, I want to further go on, ask a question about A16. And if you are doing a program where you have a group coming in and you're teaching energy education, and you want to give those people a couple of CFL light bulbs, some weather stripping, maybe a window kit or something that they can, you know, take with them and apply to their home. Use the things that you're training them, you know, something that can get them started and show them. Can the A16 funds be used for that and not have it be counted as low cost, no cost weatherization materials?
Yes, if it's part of your education component. Really, the key thing that you'll probably hear us say over and over again is whatever your policy or procedure is, just have it documented in writing. Because so many of these details are not fleshed out at our level, so as long as you have it as part of your policy or operations manual, then that's what we, the monitors and the auditors, will be looking at when they come out to test that.
And I just wanted to add to that if you choose to use Assurance 16 money and then you'd like to distribute to your sub-grantees, it's definitely suggested that you have written policies and also somehow in your definition make a distinction between Assurance 16 and administrative funds, because at the sub-grantee level, what I have seen in my experience that if you don't define it well enough, some of the sub-grantees could view that as administrative funds and use it for intake or certification of applications, and that are not typically Assurance 16 activities.
No, that's good.
I think there was a hand over here somewhere.
Yeah, I have a question about the admin. So you're saying that if I had a caseworker that is processing these applications, or what we call a direct service case manager, that could be qualified as a direct service, her wages. If she's, processing these applications, determining them eligible, their benefit and all of that.
You have the flexibility to define the concept of what is considered to be administrative costs when it comes to LIHEAP funds. And the TANF example that Lauren was giving before in the special topics section of our website, and IM from the year 2000 sort of outlines one example of that, which is you have the option to say that salaries associated with program intake will be deemed a program cost rather than an admin cost. What that means is you don't have to charge that intake worker's time to admin when they're actually performing intake, but it means that you will have less money to give out as benefits. So you have to weigh the pros and cons of that, because less money means lower benefits or fewer clients served.
Well, I guess I have a person who processes all these applications, and then everybody else, how you said that 2 people should look at it to verify it. I could have a portion of their wages hit there because now nothing's hitting there for the other people that are doing small parts of all of this.
So you can have, what we were talking about was like monitoring case file
Yes.
review. So you can do the wages associated with case file review and monitoring as part of admin.
Right.
And the salary associated with the actual intake as part of program. But that means you have to have a written definition of administrative cost in your manual. You can't just go back home after this and say, Yulia said I can do it, so we're going to do it.
Right.
Right? I mean, so you
Well, I
need to
guess
write that down.
In other grants that we have, one specifically that is an HHS grant, it outlines in its, what it says is allowable and unallowable. It defines a caseworker as in a PS worker,
Yeah.
as a direct service, right out says it.
Yes, and LIHEAP is a block grant, so we don't get to do that.
All right, thank you.
But you can define yours.
Yeah. Sorry, go ahead.
So, no,
No, I was just going to say, one litmus test to keep in mind is the extent to which the staff are actually having direct contact with the clients. So if you're talking about a staff person who is more behind the scenes doing data entry, for example, on the application, probably more of an administrative cost, right? But if you have someone who's more front end, actually helping to do referrals on other programs, helping to get a good sense from that applicant about what their situation is, at least a portion of their time sounds more direct if you choose it to be. So again, you have some flexibility there. So if you are going to split out staff time that way, particularly where you have one person who is partly charged to admin, partly charged to Assurance 16, partly charged to your direct program costs, there has to be some support behind that, because again, when we monitor or when your independent auditor comes out, that's one of the things they're going to test for. So exactly. So you can do a time study where you pick a certain time of the year, a certain duration, where you're going to track actual hours, and from there develop a percentage breakdown between these different charges. People also do this across programs, right? If you're sharing intake workers between DOE WAP, CSBG, LIHEAP, Head Start, you can also do the same principle there. Another option is to just do actual hours and have that on their timesheets and have that certified every pay period. So just if you're relying on a time study, we just ask that, that be current, updated periodically, not 10 years old and irrelevant. So just some cautions there. Any follow-up questions on this area before we move on? Okay, there was, yes.
Hold on just a second.
Okay.
I just wanted to make sure I understood what you had said. You recommended that there be written policies pertaining to the use of Assurance 16, whether it was used by the state or if it was used to distribute funds out to subgrantees. And then you said it needed to be distinguished carefully from something else, and I missed that part.
Oh, that was administrative cost. So, for example, as Lauren was saying, people who certify an application can be supported out of your administrative cost. Assurance 16 can be assigned to folks who are responsible for doing energy education and trainings and so on and so forth. But the definition, there should be two sets of definition, if you will. One is for Assurance 16 and one for administrative cost. And they should be not the same definition. There should be clear-cut separation based on how you'd like to define admin versus Assurance 16.
And just keep in mind, this question was talking about subgrantees as I read it, but if you are doing these kinds of education activities, the statute is capping that at 5%. So if you're doing these activities, you should be tracking it. Likewise, if you're setting aside that budget for your subgrantees, again, part of that monitoring just to make sure they are actually charging that down, because otherwise that may again pose an obligation issue for you further down the road. Another question from this individual is there a maximum amount that an agency can draw down in funding to not be considered an audit finding? Good question. No, there is no magic number. It's basically, we're trying to get a little clarification on this ourselves. But generally, this is, again, part of the Cash Management Improvement Act, a federal law. And so generally, the rule of thumb is a reasonable amount of funding for your immediate needs. Usually, it's a few days, 3 days needs. 3 days. And so it's not really looking at, oh, I have a month or two coming up. It's your immediate needs that you're drawing down. Because, again, the principle behind it is that federal funds should be going in and out. There should not be a lag where they're drawing interest. That's the real principle behind that.
I think the payment management system says 3 days.
3 days.
That you have to, whatever you draw has to be liquidated in 3 days.
Right, 3 business days. Right, exactly. Great question. So, next question. There's actually a scenario and then a question. You carry over 10% of your admin. The next year, you spend, so in other words, they use no admin that first year. The next year, you spend that 10% plus all of the admin for that current year. How do you report spending more than 10% of admin during the current year? How do you show the prior percentage from the last year as an expenditure?
So I think that would be on the grantee survey. We ask you for, well, the grantee survey asks you about obligations. So you don't actually report expenditures on anything except the SF 425. And in terms of the SF 425, you would be reporting that on 2 separate forms. One form for your 14 funds spent in 2015, and a second form for your 15 funds spent in 2015. So that's where you would do that. And then on the grantee survey, you are reporting uses of funds, right? One of your sources of funds is carryover, and then you report uses of funds. So and your carryover will be part of that. And if you hit more than 10% on admin, we'll call you. It won't be an error in OLDC. It will be a warning, and you'll know that why the warning is there. And if you are a kind human being, you will write a note to explain why that warning is there, because we'll call you either way, but if there's a note there, the conversation will be a lot shorter, right? So you will report it on your grantee survey, and it will say more than 10% in the admin line, and you will explain it to us, and that will make sense, and we will record that in the notes section, and then that is how we will report it to Congress, and everything will be fine.
Do you want to talk a little bit about, this year we have been working, as Lauren or Yulia mentioned, that this year we have been working with our contractor Apprise and looking into some of those issues, the 10% limit. They're also looking at prior year's obligation expenditure. So it's what I'm trying to say here is that once you submit your grantee survey, there is a lot of room for us to discuss that with you, and also contractor is available to discuss those amounts with you, so that it can finally we can call it a final grantee survey report, and then we can report that number.
Yeah.
To,
And this actually happened. It
to
wasn't
the Congress,
for
you know.
admin, it was for weatherization. Somebody reported like 17% of weatherization, and we noticed they didn't have a weatherization waiver, and we're like, well, that's weird. So we called them, and they explained to us, well, we didn't use our full 15% of weatherization last year, and we had carryover, so that's where the other 2% came from. Done. Great.
Right.
Thank you. That's it.
So those are all of the pre-submission questions. Are there any other questions or comments that people want to share for today? Hopefully we haven't worn you out. You'll come back tomorrow. Yes, one more question back here. Maybe I'm missing a few. Oh, I'm sorry. Mike over here. Oh, hello.
Hi. I was wanting to know about the Assurance 16,
Yes.
and we have a budget coordinator that goes through our communities and does home budgets, and I was wondering if we went out with her and did that with our LIHEAP clients and especially our crisis clients from the year before, if that would be considered, the travel would be considered under the 16, or would it go under direct?
I'd say you can charge that to Assurance 16, but you should get that from me in writing. So send me an email.
We would need to send the letter to all of our clients in the villages that we go to. We don't go to all of the villages, but we usually hit 5 villages in a year.
Yeah, you don't have to go to all of them. I mean, Assurance 16 activities by design should be targeted, right? So there's only a little bit of money. It's not really supposed to work. It's not something that is designed to be like something for everyone. It's supposed to be a targeted intervention to people who really need it so that an outcome is achieved.
Yeah, our target is the 5 most expensive
Right.
places.
So that sounds very intelligent.
Okay.
Yeah. Susan? Oh, come back.
Just as a follow-up to that, I do quarterly telephone conferences with my tribes in Alaska, and that question came up, and I called somebody at ACF and asked that question, and I was told a different answer. I was told that we couldn't target because that would be discrimination, and therefore whatever we did, we had to do consistent across the whole region. So I just wanted to throw that out there so that I could get some final clarification on that, because I'm hearing something different than what I was told previous. Thank you.
Can I, Susan, so the target, did you have a justification for the target? Like why you're targeting certain population? Okay.
This exact question.
I was trying to ask it on their behalf, get an answer, and email everybody.
So, sorry, we've been confusing on this point, and thank you for bringing that to our attention. So, I guess the only time I could really see an issue of discrimination, I guess, is if there really wasn't a connection in how you were targeting to the household's home energy needs. You know what I'm saying? So the statute says you will target vulnerable populations. It defines vulnerable populations as households with at least one member having an elderly person or a disabled person, as you define disability, or a young child. And it generally says we are required to target the highest form of assistance to those with the highest home energy needs. So that is very clearly driven in the federal rules. I think some of the targeting that was just described in the context of Assurance 16 may be part of that, or it's kind of taking it further. It sounds like you were targeting certain communities based on the highest cost of fuel. Right. So again, there's that connection to the home energy. So we would not have any concern with that. That would actually be furthering the purpose of the program. Generally speaking, we sometimes get questions about from grantees about what additional eligibility criteria you can impose. So as you know, the federal rules just say eligibility is determined based off of income eligibility, taking into account household size and home energy need. But again, states can be, and tribes and territories can be more restrictive than that. So some grantees also impose an assets test. Some grantees have some kind of requirement relating to working or being in school at least part-time. So every now and then we get these questions about, well, what if we want to add this eligibility criterion through state legislation or policies or what have you. And our general caution about really most of those proposals or all of the proposals is really just consider if you're creating any sort of unconstitutional discrimination, either on the face of the law or the policy or through the way it winds up being implemented. And so I'm not going to pinpoint a particular state, but we did have a situation where a state passed a law a few years ago where they had certain documentation requirements relating to citizenship or legal alien status is required for receipt of LIHEAP. But this state law kind of went into much more detail about what documentation was required to prove citizenship. And what wound up happening was, on the face of the law, it did not seem unconstitutional, right? Okay, you have to be a citizen or have the qualified status. But in the implementation of that law, it raised constitutional concerns because it was disenfranchising a very specific population within that state, particularly the elderly black population who didn't have any of the documentation to prove they were actually citizens. And so it was creating these discriminatory effects. And so we're still working with that state on how to resolve that, since it was a state law that was passed. But that's our general response, is just be aware of any additional rules you're going to apply, either on the face of it or in how it's implemented. Is that going to disenfranchise or unfairly impact a certain population that you're going to be serving, who might be eligible? Long-winded answer to that question. I think we had some other questions.
Send me an email, Louise.
I think we have one back here. Yeah.
Yeah, so I know it's not a HHS report, but the Federal Funding Accountability and Transparency Act report, are you going to be mentioning that at all as a required report for receiving, if we receive funding?
That's a great question. We shall certainly add that to the PowerPoint for when it gets posted online. So the FFATA, as we fondly refer to it, is a required reporting requirement. It's explained in the terms and conditions to all of your grant awards, which they're apparently no longer. Our grants management office mails the official grant award letter, usually to your fiscal office, and then we email a courtesy copy to our contacts in the LIHEAP office. Apparently they're no longer mailing a hard copy of the terms and conditions to the grant award, but they are available on our ACF website. If you can't find them, just let us know. We can send you the link for that. And one of those, there's actually general terms and conditions for all mandatory grants, of which LIHEAP is one, and then there are LIHEAP-specific terms and conditions, and both would apply. And so one of the general terms and conditions relates to FFATA, which basically, in a nutshell, is that there's certain real-time reporting that is ongoing, I believe at both the subgrantee and the grantee level, regarding contracts, subcontracts, or grants that exceed $25,000, I believe it is. Yeah. We don't review the FFATA reports. They're reviewed by another entity. But yes, that is a requirement if that's triggered by your agency. Again, we mentioned some people get $4,000 a year, so they probably would not be subject to that. But if you have any questions about FFATA, just let one of us know, and we'll be happy to find an answer for you. I felt like I saw a hand go up over here earlier.
No?
No. Any other questions or comments for today? You'll have another bite at the apple tomorrow.